A sovereign wealth fund worth more than $1 trillion just walked away from professional golf. Not because it ran out of money, because even with one of the largest pools of capital on Earth, the man who controls it couldn't buy what he wanted most: total control of the game. For 5 years, Crown Prince Mohammed bin Salman's public investment fund poured over $5 billion into a single golf league, hoping to force a merger with the PGA Tour on his terms. The PGA Tour said no. It kept saying no, and in 2026, it was the Saudis who blinked first. That single decision raises a much bigger question. If a $1 trillion fund controlled by one of the most powerful men in the world can't always win, what can his money actually buy? And just as important, what has he already bought, quietly, almost everywhere else? The answer runs through a football club in northern England, a golf tour that nearly broke professional sports, a desert megacity originally budgeted at $500 billion that may now cost more than 15 times that, and an artificial intelligence company racing to become one of the most powerful in the world. This is the story of how one man, sitting on top of an ocean of oil money, decided to buy his way into football, golf, Silicon Valley, and the future itself. Some of it worked, some of it is already falling apart, and almost none of it happened the way anyone expected. Mohammed bin Salman didn't just spend money, he used money to test something far more interesting: how much of the world can actually be bought, and how much, in the end, refuses to be sold. To understand how Mohammed bin Salman ended up controlling one of the largest pools of capital on Earth, you have to go back to 1971. That year, King Faisal created a small state holding company called the Public Investment Fund. Its mandate was modest: hold the government's shares in a handful of domestic companies, finance local development banks, and otherwise stay out of view. For more than 40 decades, that's exactly what it did. Quiet, passive, and almost entirely unknown outside the kingdom's own bureaucracy. Everything changed in 2015. Mohammed bin Salman, then a young and largely unknown deputy crown prince in his late 20s, was placed at the head of the fund's board. Oversight of the PIF was moved out of the Ministry of Finance and into a new body he chaired directly: the Council of Economic and Development Affairs. That single bureaucratic shift mattered far more than it sounds. It took a sovereign fund that had answered to civil servants and career bureaucrats and put it under the direct personal control of one ambitious young royal who answered to almost no one. 2 years later, in 2017, he unveiled Vision 2030, a plan to do something no major oil producer had ever managed before: build an economy that didn't depend on oil at all. The numbers tell the story of how fast that ambition scaled once he took the wheel. In 2015, the PIF managed roughly $150 billion, a respectable but unremarkable sum for a Gulf sovereign fund. By 2020, that figure had doubled. By 2024, it had crossed $900 billion. And by the middle of 2026, the fund stood above $1.15 trillion in assets under management, making it one of the 5 largest sovereign wealth funds on the planet, trailing only Norway's oil fund, 2 funds based in Abu Dhabi, and China's state investment vehicle. Where does that kind of money actually come from? Overwhelmingly from one source: Saudi Aramco, the state oil company that is, by several measures, the single most profitable company in human history. Aramco's profits, dividends, and equity stakes flow directly into the PIF's balance sheet, supplemented by government asset transfers and the fund's own returns on prior investments. Then Mohammed bin Salman redeploys that capital into everything from Silicon Valley artificial intelligence startups to century-old English football clubs. Oil revenue goes in on one side of the machine. His global influence comes out the other. But Vision 2030 was never just about parking oil money in foreign stock portfolios for safekeeping. Mohammed bin Salman wanted something far more ambitious: to convert decades of petroleum wealth into permanent economic relevance in sports, entertainment, technology, tourism, and global finance, so that even after the world eventually moves past oil as its dominant energy source, the kingdom he will one day rule still matters on the world stage. That ambition required two very different strategies running at the same time. At home, his fund began financing what Saudi officials now call giga projects, entire cities, resorts, and tourism developments built essentially from nothing in the open desert, designed to transform Saudi Arabia into a country the world buys oil from, into a country the world actually wants to visit, invest in, and do business with. Abroad, the fund started buying significant stakes in industries where Saudi Arabia had previously had almost no meaningful presence whatsoever: English Premier League football, professional golf, electric vehicle manufacturing, video game publishing, and most recently and most aggressively, artificial intelligence infrastructure. Both strategies demanded the exact same thing: staggering amounts of capital deployed faster than virtually any sovereign wealth fund in history had ever attempted, all authorized on the direct say of one man. There was no parliament to slow him down, no board of independent directors who could overrule him, no shareholders demanding quarterly accountability. If Mohammed bin Salman decided the PIF should spend $5 billion on a golf league nobody had heard of, or £300 million on a struggling English football club, the decision could move from idea to signed contract in a fraction of the time it would take almost any Western institution. And both strategies were about to collide head-on with a problem that nobody in his inner circle had fully priced in ahead of time. Money can open almost any door in the world. It can buy a seat at nearly any table. But it cannot always control what happens once you're actually sitting in that room, across from people who have spent decades building institutions designed specifically to resist exactly this kind of pressure. To understand how Mohammed bin Salman's capital actually moves through the global economy, start with the engine room, Aramco. Aramco doesn't just produce oil, it generates the cash that makes almost everything else in this story possible. A portion of Aramco's shares, dividends, and retained earnings flow directly into the PIF, alongside separate government asset transfers, sovereign debt issuance on international markets, and returns the fund earns on the investments it already holds. That's the fuel. The fund Mohammed bin Salman chairs is the engine that converts it into something else entirely. Once that capital reaches the fund, it splits into two very different pipelines, both ultimately answering to him and reviewed by the same small circle of advisors he trusts most. The first pipeline stays inside Saudi Arabia. This is the domestic track, the one financing giga projects like NEOM, the futuristic region in the country's northwest, built around a $500 billion centerpiece called The Line, a mirrored, car-free city designed to stretch 170 kilometers across the desert, eventually housing up to 9 million residents, according to the original master plan, released in 2021. By 2026, leaked internal documents and outside financial audits suggested NEOM's true lifetime cost could reach nearly $9 trillion by the time the full vision is built, assuming it's ever built in full at all, which by 2026 looked increasingly uncertain to outside observers. If this is the kind of financial analysis you want to see more often, subscribe to Capital and Consequence.
The second pipeline moves outward into international acquisitions designed to buy Mohammed bin Salman's kingdom a permanent seat at the table in industries it had never meaningfully controlled before. This is where Newcastle United, Live Golf, and Humane come into the story. Each one represents a genuinely different method of converting his capital into lasting influence, executed day to day on his behalf by PIF Governor Yasser Al-Rumayyan and a small team of deal-makers who report directly to the Crown Prince. With Newcastle United, the method was the simplest of the three: straightforward ownership. In October 2021, the PIF acquired 80% of the English Premier League club for roughly £300 million, genuinely pocket change by sovereign wealth fund standards, and used that majority stake to directly control transfer spending, stadium and infrastructure investment, coaching decisions, and the club's broader public image almost overnight. With Live Golf, the method was disruption rather than acquisition. Rather than trying to buy an existing, deeply entrenched institution like the PGA Tour outright, Mohammed bin Salman's fund built a rival league from scratch in 2022, spending more than $5 billion over 4 years, specifically trying to force a merger with the PGA Tour on terms favorable to Saudi Arabia. Al-Rumayyan personally chaired the new league's board throughout this period. The underlying logic was simple. If you can't buy the incumbent outright, you build a competitor large enough and well-funded enough that the incumbent eventually has no choice but to negotiate. With Humane, launched in May 2025 under his direct chairmanship, the method shifted again towards something more collaborative, strategic partnership rather than outright control. Rather than attempting to buy NVIDIA, OpenAI, or any other major AI company outright, Mohammed bin Salman positioned Saudi Arabia as an essential infrastructure partner for the entire industry, funding new data centers, securing long-term chip supply agreements with NVIDIA, AMD, and Qualcomm, and taking meaningful equity stakes in companies like xAI before its subsequent merger with SpaceX. 3 distinct mechanisms, 3 different theories about how to convert raw financial capital into long-term, durable power. And, as the next few sections of this story make clear, each one produced a dramatically different result. Start with the clearest winner in this entire story, Mohammed bin Salman himself, and the small circle of decision-makers around him who actually control how this capital gets deployed across the globe. The most obvious gain is diversification. For decades, Saudi Arabia's entire economic future was tied almost entirely to a single commodity whose price it couldn't control on its own: oil. Every barrel sold exposed the kingdom and the royal family's grip on long-term power to the same recurring risk: a sustained price collapse that could gut government revenue virtually overnight, the way it did in 2014 and again in 2020. By converting oil wealth into equity stakes across football, golf, gaming, and artificial intelligence, Mohammed bin Salman spreads that risk across industries that have nothing to do with crude oil prices whatsoever. If oil drops sharply tomorrow, Newcastle United's broadcast revenue doesn't drop with it, and neither does Humane's chip supply agreement with NVIDIA. The second gain is much harder to put a precise number on, but arguably more valuable to him personally over the long run: legitimacy. Before 2021, most global sports fans had never thought about Mohammed bin Salman or his sovereign wealth fund even once. After the Newcastle takeover, he was suddenly a known, discussed, debated entity in English football. Covered on broadcasts, raised in parliamentary questions, gradually normalized in a way that traditional diplomacy could never have achieved on its own. Owning a beloved, century-old football club did something that state visits and trade agreements hadn't. It made his money, and by extension his rule, feel familiar and almost ordinary to millions of football fans who had never previously considered Saudi Arabia's internal politics at all. Newcastle United itself profited enormously in pure footballing and commercial terms. Within 3 years of the takeover, the club had qualified for the Champions League for the first time in 2 decades, attracted elite international players who previously wouldn't have seriously considered Newcastle as a destination, and seen its overall commercial valuation rise sharply according to multiple independent estimates. For the club's executives, its players, and a large share of its supporters, the financial upside was immediate, tangible, and real, regardless of where the underlying money originated. Technology partners told a remarkably similar story on a much larger scale. NVIDIA, AMD, Qualcomm, and xAI all found in Humane something increasingly rare and valuable in the modern AI industry, a partner ultimately controlled by Mohammed bin Salman personally, willing to commit tens of billions of dollars without the years-long fundraising cycles typical of traditional venture capital rounds. For companies racing against tight deadlines to build data centers and secure scarce chip supply ahead of their competitors, his capital wasn't simply welcome. In several documented cases, it was the fastest, least conditional capital available anywhere on Earth at that moment. And even in the case that looks most like an outright loss on paper, there were quiet, very real winners, the golfers themselves. Players like John Rahm and Bryson DeChambeau signed guaranteed contracts worth hundreds of millions of dollars, money that existed in the first place only because Mohammed bin Salman was willing to absorb losses of roughly $400 to $600 million a year in order to build a credible league from nothing. Whether or not LIV Golf survives in its current form past 2026, those contracts were already signed and that money was already paid out in full. The pattern across all 4 cases, when you step back, is remarkably consistent. Whoever sits closest to where his capital actually lands, a football club, a chip maker, a professional athlete, tends to win quickly, visibly, and tangibly. The harder, more important question, and the one that ultimately determines whether his entire decade-long strategy succeeds or fails, is who ends up paying for all of it.
If the winners in this story are relatively easy to spot, the losers are far more complicated. In several cases, the exact same parties show up on both sides of the ledger at once. That includes, remarkably, Mohammed bin Salman himself. By spring 2026, his own fund's internal numbers told an increasingly uncomfortable story. LIV Golf had burned through more than $5 billion since its 2022 launch. Annual operating losses ran consistently between $400 and $600 million a year. There was almost no realistic path to profitability through ticket sales, sponsorships, or broadcast rights in the foreseeable future. For years, PIF leadership had publicly insisted the league was funded into the 2030s, regardless of performance. Then, quietly, that changed. PIF leadership informed LIV Golf's own staff that funding would end entirely after the 2026 season. Yasser Al-Rumayyan, the governor who answers directly to Mohammed bin Salman on every major decision, stepped down as LIV Golf's chairman just days after that announcement became public. Niam tells an even starker version of essentially the same underlying story. What began in 2017 as a $500 billion showcase project, personally championed and repeatedly promoted by the Crown Prince himself, saw its flagship development, The Line, scaled back dramatically by early 2026. Internal financial audits, cited extensively by the Wall Street Journal, found clear evidence of deliberately inflated revenue and population projections.
Those numbers had been used internally to justify continued funding requests to the PIF's own investment committee. Multiple major construction contracts, collectively worth several $billion, were canceled outright within a single 18-month period. The Asian Winter Games, originally planned for Neom's mountain resort, were postponed indefinitely with no rescheduling announced. None of this necessarily means Neom is dead, but it confirms, in hard financial terms, that even a fund this size has real limits on what it can sustain all at once. Then there's a harder, less easily measured cost: reputation. When the PIF first acquired Newcastle United, human rights organizations responded immediately. Amnesty International, the Democracy for the Arab World Now group founded by Khashoggi's own colleagues, and several others all publicly labeled the deal sports washing. Their argument was straightforward. A beloved 100-year-old English institution was being used to soften the global image of a government led by a man who, according to the CIA's own formal assessment made with high confidence, ordered the 2018 assassination of Washington Post journalist Jamal Khashoggi inside the Saudi consulate in Istanbul. Mohammed bin Salman has stated publicly that he takes responsibility for the killing because it happened under his watch. He has consistently denied personally ordering it. A separate UN investigation concluded the Saudi state was responsible for what it formally described as a deliberate, premeditated extrajudicial execution. The Premier League accepted what it called legally binding assurances that the Saudi state itself would not directly control the club's day-to-day operations. But Mohammed bin Salman simultaneously chairs the very same public investment fund that owns 85% of that club outright. Critics, including several sports governance researchers, argue that distinction exists almost entirely on paper. Newcastle's own fan base remains genuinely divided. Many celebrate the club's transformation on the pitch. Organized groups like Newcastle United Fans Against Sports Washing continue to protest what they describe as reputation laundering, paid for, in their words, with stolen lives. And ordinary Saudi citizens carry a far less visible but ultimately more personal financial risk. Giga projects like Neom absorb hundreds of billions of dollars in committed spending under his direct authority. The kingdom's projected 2026 budget deficit sits at roughly $44 billion, according to official government figures. If oil prices stay depressed and giga-project costs keep climbing, someone inside the country eventually has to close that gap. That could mean new sovereign debt. It could mean painful spending cuts, or it could mean slower growth in the very diversification programs Mohammed bin Salman has personally promised will transform ordinary Saudi lives within this decade. Money was spent everywhere across this story, entirely on his personal authority. The bill, when it eventually comes due in full, will almost certainly not be paid everywhere equally.
Money alone doesn't change the balance of power. What actually changes it is what that money buys access to. By 2026, Mohammed bin Salman's capital had bought him meaningful access to 4 distinct things that matter far beyond their price tags: cultural relevance, technological infrastructure, diplomatic leverage, and a permanent seat at tables that used to be closed to Saudi Arabia entirely. Start with culture because it's the easiest to see. Before 2021, Saudi Arabia had almost no organic, emotional connection to English football. This is a sport followed passionately by hundreds of millions of people who had genuinely never given the kingdom or its crown prince a second thought. Owning Newcastle United changed that almost instantly. Every match broadcast, every transfer window headline, every Champions League appearance carries his fund's name into living rooms across dozens of countries. Traditional government diplomacy could never realistically reach that many people on its own, no matter how many state visits were arranged. Now look at technology,
which is arguably the single most consequential shift of all four. Through Humane, which he chairs and personally oversees, Saudi Arabia didn't just purchase finished AI products, it bought a genuine position inside the underlying infrastructure of the entire industry. Long-term chip supply agreements with NVIDIA and AMD, joint data center ventures with Qualcomm, and an equity stake in xAI that later converted into shares of the combined SpaceX xAI entity, now valued at over $1 trillion. If artificial intelligence becomes as economically central as oil was throughout the 20th century, Mohammed bin Salman is positioning himself not merely as a customer of that future, but as a landlord somewhere inside it. Diplomatically, this same capital buys him something harder to put a number on, but every bit as real: access. American technology executives, senior Premier League officials, and PGA Tour leadership have all, at different points over the past 5 years, found themselves negotiating directly with his personal representatives. They weren't adversaries forced to the table. They were dealing with a counterparty simply too large to comfortably ignore. When Saudi Arabia hosted the U.S.-Saudi Investment Forum in late 2025, the room wasn't filled with oil ministers exchanging pleasantries. It was filled with the CEOs of NVIDIA, OpenAI, and SpaceX, courting the one man who chairs the fund that might finance their next decade of growth. But here is exactly where the power equation becomes far more complicated. The Live Golf collapse proved something important about the limits of sovereign capital. His money can force a seat at almost any table on Earth. It cannot always force the outcome once he's sitting in that seat. For nearly 5 years, Mohammed bin Salman tried repeatedly to use Live Golf as leverage to reshape the entire structure of professional golf. The PGA Tour absorbed enormous financial damage. It lost several star players to defection. It endured a Senate hearing focused on antitrust and sports washing concerns, and it still refused to merge on his terms. In the end, it was his side that walked away first, not theirs. That outcome should genuinely reframe how outside observers think about his power. It isn't unlimited, no matter how large the fund grows. It isn't guaranteed to win every confrontation it enters. What it reliably does is shift the underlying odds in his favor, buying him patience, buying continued access, and buying years of negotiating leverage that smaller players simply cannot afford to match. Sometimes that's enough to win outright, as it clearly was with Newcastle United. Sometimes, as with Live Golf, it's only enough to extract concessions and inflict lasting damage without ever winning the entire game. Either way, the world's biggest institutions now have no choice but to factor his capital directly into their own long-term planning, whether they welcome that reality or not. That single fact, more than any individual deal examined so far, is what real economic power actually looks like in 2026.
If you've stayed with us this far, subscribe to Capital and Consequence and join us for more long-form documentaries about money, power, and the consequences behind the headlines. So, where does this go from here? Based on the PIF's own recent public statements and its formal 2026 to 2030 strategic plan, a handful of scenarios stand out as the most plausible paths forward. The most likely path, according to available evidence, is consolidation rather than retreat. Leadership under Mohammed bin Salman has been explicit that the fund isn't pulling back from international investment broadly. It's actively redirecting that capital toward areas with clearer, faster returns. The very same week the PIF publicly confirmed it would stop funding LIV Golf, it doubled down hard on artificial intelligence. It expanded Humane's chip partnerships. It launched an entirely new venture fund focused exclusively on early-stage AI infrastructure. Under this scenario, professional sports likely remain part of his broader portfolio,
but increasingly through ventures with clearer paths to profitability, sponsorships, individual tournaments, minority ownership stakes, rather than open-ended rival leagues that bleed hundreds of millions of dollars every single year with no end in sight. A third, more cautious scenario involves continued recalibration of the giga projects he has personally staked much of his long-term legacy on. If oil prices stay depressed for an extended period and the kingdom's budget deficit persists near $40 billion annually, NEOM and similar large-scale developments may face further significant scaling back. Outside private capital, including foreign pension funds and infrastructure investors, would likely be brought in to share a financial burden his fund can no longer comfortably carry entirely on its own. Saudi officials have already publicly signaled real openness to this particular path. They consistently frame it as deliberate fiscal discipline rather than outright failure or retreat. What almost certainly won't happen, based on everything examined throughout this documentary, is anything resembling a full retreat from global markets altogether. The PIF's stated target of $2 trillion in total assets under management by 2030 still officially stands, unchanged and unrevised since it was first announced. Whether or not every single individual bet ultimately pays off, his broader strategy of converting decades of oil wealth into lasting international economic position is clearly not being abandoned. It's being actively refined deal by deal based on a growing body of evidence about which specific approaches actually worked in practice and which ones, like LIV Golf, very clearly didn't deliver the intended result. The risk that remains most significantly underpriced by financial markets and foreign governments alike is concentration itself. An extraordinary, almost unprecedented amount of global economic leverage spanning professional sports, advanced technology, and critical infrastructure is now tied directly to decisions made by essentially one man sitting in Riyadh. That kind of concentrated power can move remarkably fast when the underlying bet works out as planned. It can also move just as fast and just as unpredictably when it doesn't. So go back to exactly where this story started. A $1 trillion fund, controlled almost entirely by one of the most powerful men in the world, walked away from professional golf, not because he ran out of money, but because money, in the end, turned out to be necessary and not sufficient on its own. That's the real, honest answer to the question this documentary opened with. Mohammed bin Salman didn't buy unconditional, unlimited global power. He bought something far more specific and in some ways considerably more interesting: leverage. Enough capital to force his way into rooms he had never once been welcome in before. Enough patience to outlast organized resistance in most of them, and enough sheer financial scale to make institutions ranging from the Premier League to NVIDIA treat him as a counterparty simply too large to dismiss or ignore. In football, that same leverage produced an unambiguous, clear-cut win. Newcastle United is genuinely transformed on and off the pitch. His fund holds 85% of a Champions League club outright, and the reputational cost, as real as it undeniably is to human rights organizations and to the fans who continue to protest it openly, hasn't slowed the underlying deal down for a single day since it closed. 5 years ago, almost no one outside England had strong feelings about a mid-table club from the northeast coast. Today, that club is a recognizable extension of his own ambitions, watched by hundreds of millions of people who associate it, whether they realize it or not, with the kingdom that now owns it. In golf, the exact same leverage produced a far murkier, more ambiguous outcome. Billions of dollars spent, an entire league built from absolutely nothing, years of bitter legal warfare and public negotiation, and in the end, the PGA Tour kept its core structure fundamentally intact, and it was his side of the table that walked away first. Money bought disruption. It never quite managed to buy outright victory. And the gap between those two outcomes is exactly where the real lesson of this story lives.
In the deserts of Neom, that same underlying leverage is still actively being tested in real time against a staggering number, nearly $9 trillion, that even a fund of this extraordinary size cannot absorb without serious, lasting consequence. Whether the line is ever finished as originally imagined or quietly redesigned into something smaller and more achievable, the project has already revealed something important. Ambition this large eventually runs into arithmetic that no sovereign fund, however large, can simply will away. And in artificial intelligence, the leverage is genuinely just getting started, with stakes that may ultimately end up dwarfing everything else examined in this story, including oil itself. If Humane's current trajectory holds, the next chapter of this story may not be written in football stadiums or golf courses at all, but in data centers, chip foundries, and boardrooms most of the public will never see. What ties all four of these very different cases together isn't a simple, comfortable story about one man quietly buying the entire world. It's a considerably more honest one, about exactly where that particular kind of concentrated capital actually works, where it clearly doesn't, and what gets sacrificed along the way in the process of finding out. Institutional independence, sustained reputational scrutiny, and sometimes billions of dollars in straightforward, unrecoverable losses. Mohammed bin Salman spent the better part of the last decade testing how much of the world could realistically be bought with enough money and enough patience. The answer turned out to be considerably more nuanced than he likely expected when this all began. A great deal of it, it turns out, genuinely can be bought. Some of it, even with a full $1 trillion sitting on the table, simply refuses to be sold at any price. If this kind of financial analysis is something you want to see more of, subscribe to Capital and Consequence. Share this documentary with someone who follows money, power, or global business closely, and leave a comment with your honest take. Who do you think actually came out ahead in this particular story? And which Saudi-backed gamble should we investigate next?
For viewers who want the complete research dossier behind this documentary, the Capital and Consequence dossier is available in the description. See you in the next video. Capital and Consequence. Follow the money. Understand the consequences.